Okay, hi guys. This is Krista again. We're on. This is the MarketWatch article that I was discussing in my last video. I was not able to record the screen on my phone. It's not that easy. So here I have it in my computer, and I'm taking the Xbox app, which is designed to capture games, and capturing my screenshot here. So I'm going to go ahead and read this, and then I will give you my commentary on it. So the title of the article is Beware of the Toxic Concoction That Could Finally Crush the U.S. Economy. We live in a bizarre world dominated by magical thinking. If money doesn't loosen up, this sucker will go down. President George W. Bush famously uttered these words a decade ago as the U.S. government was scrambling to restore liquidity and calm panicky markets during the upheaval of the financial crisis. A few years after that, Berkshire Hathaway's Warren Buffett hailed Bush's comments as the greatest economic statement of all time. At the time, Buffett said Berkshire always has at least $20 billion in cash. This is really important, guys. Just what I was speaking about before. You need to have a lot of money in your savings account to weather a market crash. Don't just keep spending your money right now because the economy is good, because you never know what's going to happen. Someday in the next 100 years, when the world stops again, we will be ready, he explained to a group of MBA students in 2013. So hopefully, well, we'll see how long this boom lasts. Last year they were saying the same thing. They were saying that the market was going to crash and people were being conservative. Warren Buffett has actually, his stock, Berkshire Hathaway, has not kept up with the S&P 500. Normally it does. Normally it surpasses the S&P 500, but because he has been very conservative in his investing during this big boom, his returns have been lower than what's in the S&P 500. Okay, I'm going to start up again here. There will be some incident. It could be tomorrow. At that time, you need cash. Cash at that time is like oxygen. Okay, read one look at this and you'll get why Buffett sits on a record cash pile. We are living in a bizarre world dominated by magical thinking, he wrote in his latest post. A world in which Federal Reserve creating more dollars out of thin air is supposed to be the solution to everything. But that's clearly not the case. There are several knotty structure problems that he says he can't be helped by accommodative money policy, including unsupportable pensions. I might have one of those. Mounting consumer debt, a healthcare system that's bankrupting the country, outrageous student loan debt, funding unwinnable wars, etc. The loose money approach is actually metastasizing a new set of problems that will ultimately bring this sucker down. All that free-flowing Fed cash is nothing more than socially useless financial activity that he says enriches a few at the top and leaves the rest of the country behind. It all adds up to what Smith sees as the same toxic concoction that has led to the destruction of economies throughout history. The great karmic irony is the banks and the financiers rigged and gamed the system so rapaciously, absolutely confident that there's no end to the loose money, that they've overlooked an increasing fragility of the entire system they've ruthlessly exploited, he said. This sucker is going to go down, and sooner than we think. Meanwhile, the market held steady on Wednesday with the Dow shaking off early declines to sneak into positive territory. Okay, that's looks like the end of the, here's some dude that I guess he is the person that commented or worked on this article. And I'm going to go ahead and give my own comments on this now. Hi guys, it's Krystal again. I'm back. This is the next morning after I have done the MarketWatch reading for this article that I had read. I have the article in front of me so I can refer to it, but I'm just going to give my commentary on it. First of all, I would like to thank this person. His name is, he was the dude at the end of the article. His name is Shawn Langlois. Shawn Langlois is a editor and writer for MarketWatch in Los Angeles, and you can follow him on Twitter as well. I'll put his information down in the bottom of the description of this video. So if you want to contact Mr. Langlois, feel free. And Mr. Langlois, you'll be happy to know that once I'm a famous YouTube star, you will be famous too, because I will feature you on my vlog here. I promise. Okay. So anyways, I wanted to give him credit because he is the person that wrote this article entitled "Beware of the Toxic Concoction That Could Finally Crush the U.S. Economy." So I just wanted to give you my thoughts on this. I think his article is very valid. I think he's got a lot of valid points in it. Interestingly enough, the date of the article was December 14th, 2019. It's been a couple days since then, and I don't know how long it's going to take me to produce this video, but it might be like more time. So I don't know how current this video will be once it gets up on YouTube. As you can see, my neck looks a little bit better today. I am not like slouching, so it looks like this crepey mass. I still have no makeup because I don't have a makeup crew, guys. I'm not Katie Couric or Kelly Ripa or whoever the hell is doing the media these days. But that's why I look like a plain Jane, which I will continue to do because it does take time to get pretty for the camera. So, but anyways, what I wanted to say about this is that since this article has come out, I've read like several other articles about the economy. Just no fear, don't worry about it. The economy is going to be booming. So, you know, MarketWatch and Seeking Alpha and all those news sites, it's always great to keep on top of what's going on in the world, but like politics, guys, you have to take everything with a grain of salt because everything is sensationalism. So for people that are starting out in investing, instead of focusing on stuff like this, I would suggest going over to the site called, I think it's called the BogleHeads site. I'm going to, of course I don't have the reference in front of me, so I'm going to just, again, look at the description of this video. There is a wonderful site by Jack Bogle, who was the king of value, or not the king of value investing, he was the king of the index fund. So Mr. Bogle just passed, I think he passed earlier this year. So unfortunately, he was elderly and he was not in the best of health. But he was the founder of the index fund, and he was able to keep prices on mutual funds very, very low, expense ratios. That's one thing you want to look for if you're doing anything with a ETF or a mutual fund, is the expense ratio, because those are going to cut into your investments. My alarm's going off. If you can just hang out for a moment, I'm going to have to turn it off. I'll be back. Okay, I'm back. I think the camera's rolling here. That was my wife. She's my darling wife. Anyways, what was I saying about this? Yeah, so there's been a whole bunch of hype since this article came out, and like I said, it's always nice to keep track of it.
track of these things, but take them with a grain of salt, because you know the media is out there to get people to act and to make everything you know, urgent. It's not urgent, folks. Your stock is not going to collapse in 3 minutes. So just be patient and stay calm and try to ride the markets out, because if you just are in it for the long haul and you don't go with the ebbs and flows, as soon as the market starts going down, it will eventually go up. So I know there is a certain there's certain a type of risk that you have to be aware of when you're buying and selling stocks. But if you're young, you can take risks and with your investments, and then hopefully by the time you're ready to retire, they will come back. The stock market has been growing on an average of at least 10%, 10% annually for the last several years. I mean, we've had ups and downs. Even through that last 2008 recession that we had, the market is back stronger than ever now. So regardless of what happens in it, if you take a long-term picture, it'll probably benefit you. It does a lot better than if you like panic and sell your stocks or buy when the market is super high. So that's my advice to you. That's my advice regarding this article. And I'm going to have to sign off pretty soon because I have to start my day. But thank you for listening. Oh, as you also know, this is also a work in progress here. I decided to keep the camera this time horizontal. I'm still on my phone, by the way. I haven't gotten a great camera equipment. I can't set her up. I'm just doing everything really spontaneously here. But I'm thinking that the horizontal picture is way better than the up and down. I was looking at my video yesterday, and there's like a lot of black space on either side. So if you like this video, if you think it was a good video, please press the like button, please. I'd love to get more likes for the YouTube algorithm. Hit the subscribe button. If you want to give me some constructive criticism on how to make these videos better, you can leave it in the comments below. And thank you so much for watching, and have a great day. Bye.